For a closer look at what moved the market today, Julia Lee joins us now from Bell Direct. Good afternoon to you, Julia. Thanks for joining us. We did see these losses today, but what was really behind the market movements, I guess, in general?
Nadine, it wasn't really surprising to see the Australian market lose ground today. That was despite a positive lead coming through from the US, with the Dow up by 0.4% on Friday. And that's because the Australian market has had such a good run. Last week we saw the market up by 2.1%. If I bring up a graph of the last 30 days, you can see that we've seen a pretty good month for the Australian market as well, with a gain of 10%. We've seen a gain of 20% for the quarter, and since the 9th of March, we've actually seen a gain of 50%. We did see commodity prices decrease on Friday, so that was behind a lot of the losses, although the big four banks also dragging down on our markets. In fact, in general, investors seem to be turning to the defensive areas rather than the growth areas, and we saw the healthcare sector gaining ground today, as well as telecom, so the defensive's really very much in favour. We saw extremely light volumes, and that's because Japan is on holidays until Thursday, so it is quiet around the region. In fact, we've seen the worst value of trades go through since the 3rd of August, so in around about 7 weeks. So very light volumes today, and we saw the market losing 0.3%.
Now, also on the losing side today, Julia, was Murchison Metals, lost about 2% on the back of its full year result. What did you make of it overall?
If we have a look at Murchison Metals, I guess what they have seen is an increase in production but a decrease in profit. So if I break down the numbers, if we have a look at the ore mined, we saw 1.65 million tonnes, and that's up from 1.61 million tonnes in the previous year, so a slight increase there. If we have a look at the ore shipped, it came in at 1.47 million tonnes, and that's up from 1.34 million tonnes. But if we have a look at the full year net profit line, full year net profit this year was only $732,000, and that's compared to the previous year, where we saw net profit of $55.6 million. Now that's a massive difference, and I guess the difference is attributed to two separate things. First of all, if you have a look at Murchison Metals and its full year profit from year to year, last year was actually a bit of an abnormality. If we have a look at the previous 3 years before that, Murchison Metal actually saw losses. So last year, not only did they see record high prices in terms of ore, which helped the result, but they saw a lot of tax benefits which flowed through from previous losses, which they had to offset the profit against. This year, they didn't have all of those tax benefits, and we also saw ore prices decrease because of the lack of volume and lack of demand coming through from China. So Murchison Metals coming out with that full year result, not too much of a surprise to the market, but trading down 2% today. We have a look at the stock for the full year. If I bring up, I don't have Murchison Metals here, but Murchison Metals actually for the full year is up by 170% in the year to date, so not doing too badly in 2009.
Okay, and Julia, you mentioned commodity prices a little bit earlier on. They were down on Friday, right across the board. So what's the outlook for commodity prices going forward?
I guess if you're trading commodities, it's almost like trading currencies at the moment, because a lot of it is dependent on the US currency. Now on Friday we saw the US dollar strengthen, and that meant losses for commodity prices across the board, with losses in gold, oil, as well as base metal prices. So if you want to have a look at what's going to impact on commodity prices this week, you really have to look towards the currency markets to have a look at what's going to impact on the US dollar. And the big event for currencies this week is the FOMC meeting in the US on the Fed funds target rate. Now, no one's really expecting this target rate to change from 0 to 0.25%, which is where it is at the moment. But the statement is going to be very closely watched by the currency markets for any sign that the US may raise rates in the future. And of course, if you do see signs of that in the statement, that would be a positive for the US dollar, and of course that would be a negative for the commodities price, which at the moment is traveling in the opposite direction to the US currency. So commodities really dependent on the US dollar. We saw a slowdown in commodity prices, and we saw a loss because of that US dollar strengthening, but the big event, FOMC this week.
Okay, stay tuned for that one, I guess. Thanks for your analysis, Julia. We'll speak with you tomorrow.
Thanks, Nadine.